Hey everybody, Kenny Bonus here from Bonus Accounting, and it's your favorite CPA coming at you with some hot wings and some hot and spicy tax tips. So this is our second episode, and we're trying to step up the heat value on how hot these wings are. The last one, it was pretty hot, don't get me wrong, about 7,000 Scoville. Today, this one's about 8,740. But we're gonna keep getting them hotter and hotter, so stick around. If you think these ones are wimpy, well, we'll get some better ones. Per usual, I wanna give a shout out to Sean over at Hot Ones. He's the one that came up with the idea of interviewing celebrities while they talk about awesome questions in their lives. So I wanna give them a shout out. They definitely run the gauntlet and have some crazy hot wings that they eat while they go through their conversations. I'm only dealing with one little baby nugget right now. So on today's episode, we're gonna be doing 100% meals and entertainment. I wanna mention that the entertainment part of the tax deduction for business owners has fallen off back in 2018. So for now, you're stuck with me as your entertainment. On today's episode, we will be using the Holy Brain Killer Extreme Habanero Hot Sauce. This stuff, like I said, 8,740 Scoville. I'm looking forward to it. I'm hoping it's a little spicier than last time. So if you see me choking up while I'm explaining these spicy tax tips, it's the hot sauce, not my nerves. All right, let's dig in. Definitely hotter. Now touch my eyes. Oh, okay, we're good. Gotta get it down. It's hotter. Yeah, habanero, that usually does it to you, so I got my milk here just in case. Got the heat hiccups. Yep, let's power through. Alright, so we thought it would be a fitting topic to do 100% meals and entertainment. So one thing I needed to mention is that in 2021, the Congress enacted a new, wow, these are spicy. Now you're seeing it. This is good. Keep it rolling. All right. So in 2021, Congress enacted a new law that took the meals deduction of 50% to 100%. So instead of getting half of your meals as a deduction, you're able to actually get 100%, which is amazing. And it's there to help support the restaurant industry to be able to have more people wanting to go there and have it as a deduction. Usually that's a good incentive for places to spend more money and hopefully be able to generate a little bit more into the economy. Man, that was spicy. I'm not going for my milk yet, so the day I do that, we'll give out a free tax return in the comments below, so we'll keep it rolling. So, the one thing to keep in mind about meals is that it must have an actual business purpose. This can be gray at times, but it's up to you as a business owner to make sure you document the business purpose of that meal. A lot of times, the business purpose might be something like networking, taking clients out to dinner, or going out to eat with clients, going out to eat with employees, also ordering in for the office, breakfast, lunch, dinner. Those are things that can be shown to have a true business purpose. You can also write off the associated delivery fees, sales tax, and tips that come along with that food purchase. And you don't always have to be paying for the other person. Two business owners can go out, talk business, and each can pay for their own meal and then write that off respectively. So you don't always, choking on this habanero, it's good though, I'm liking it. You don't always have to pay for the other person. You can pay for yourself and have a business purpose there. There are ways to be a little more aggressive with this deduction. I always tell people be wary and consult your tax professional and make sure you document things, but you can also go out to eat or have a meal with your spouse if there truly is a business purpose to it. If you talk business, if there's some sort of business reason you probably could write off your children if they're adult children that you're talking to about business. I would caution anybody before doing that, talk with your advisor, your tax professional, just to make sure that there is a business purpose. But a lot of times I see a husband and wife in business together and going out to eat and talking about business. You can also write off meals while you're traveling on a conference, or if there's some sort of client that you're visiting out of town, you can be writing off those meals as well since you're out of town during an overnight stay. So keep those ones in mind. So I do want to make sure that people are careful when claiming meals. You don't want to get too lavish and too expensive. You don't want to throw any red flags with the IRS. If at the end of the year your expenses for meals is extravagant, you might want to consider each of those individual meals and make sure that you weren't claiming too much. You very well could come up with a lot of meals expenses if you're going out to eat every day for client purposes, but you definitely want to be tracking the business purpose along the way. And I recommend tracking that in a calendar for yourself. That way you can make notes in a calendar entry to be able to determine at the end of the year that there really was a business purpose for it. So as long as you have all your receipts, track things. If you ever pay for anything in cash, you want to make sure you're saving those receipts. Usually clip a picture of it on your cell phone, because right there you have it date stamped and tracked right there. You can always flip through your gallery later. You can also use QuickBooks Online to help upload any of those receipts. And if you're using your credit card or debit card, you'll usually see a line item on there. But typically the IRS is wanting you to have an actual receipt with the itemized list of what you had purchased. So just taking a picture is the best way to do it, because after a while those receipts, the hard copies, they start to fade and won't act as good support. But at the end of the day, you just want to make sure everything is legitimate. And if you're getting very aggressive with any of these deductions, talk with your tax professional first, just to see should there be anything that you're documenting ahead of time in case the IRS would come knocking. So you may have noticed that this one was a little bit spicier. I'm going to do the tax lick right here. Lick the sauce right off it. Finish it out like that. Definitely spicy. We're going to keep getting them hotter and hotter, and you're going to notice my face will continue to get redder and redder during these future episodes. But if you like what you see, comment below. If you have any tax questions, put them in the comments section below. Let us know what you want us to talk about. We've been focused around business owners, but we're happy to talk about any taxpayers as well. So thanks for coming out. Be sure to follow us and have a good day.